Hey, everybody, it's your friendly neighborhood podcaster, Gordon. Just want to call something out to our very loyal and large fan base out there. Want to humbly apologize on behalf of the team. We had some technical issues, and it took us a whole month to get this thing out there. So, the subject, Crowdstrike, it's up about 11%, but as we were discussing offline, if you're in it for 11%, then that's just not a very interesting investment. So anyway, CrowdStrike. It's a lot of good content in this episode. Some of the references in the news section in particular are a bit dated, but still proud of this episode and hope that you enjoy it, and we'll do better next time. Happy trading and good luck out there. Another episode of your favorite.
Say make money, money, make money, money, money.
I am Gordon, and will be the host of this week's festivities. With me, as always, are my compatriots, Brucey Boy and Georgie. Say hello, guys.
Yo.
In the house.
Some very Biden-esque energy we have coming. Thanks for mailing it in.
I would be asleep if I was Biden-esque.
Yeah, that's right. Or you might be in a bathroom on the lawn. So really quick before we dive in, just for those who are maybe new to the podcast, we are three great guys who are industry veterans who do a bull and bear take on a stock every week. Tend to focus on tech, keep our true identities secret to protect the innocent. So I like to think of myself as kind of the Bruce Wayne of financial stock podcasts. I don't know what you guys are. But hey, hopefully we'll still be useful in your process. Either as a contrarian
there. Talk some shit.
Yeah,
wait,
so
we need to do the news signal first.
Yeah. So
I did it last. Mine's the worst.
All right, then. All right, but just don't do like a techno one then, Bruce, because this is not.
All right, this is the news flash.
One too many raves.
News. Okay, with that, let's start with our favorite topic, Supermicro again. The hits keep coming from these guys. It's like literally, this company was like $2 billion in market cap or less in early 21. They touched the sky. You get to like 60 billion-ish, if I recall. Old Charles had like 7 billion. I'm trying to remember what the absolute peak was, but last I looked, this thing was down back to like 5 billion. They had that short report. Said not very nice things. The folks at Hindenburg, had some not super nice things to say. They talked to a bunch of former employees who also did not have a lot of nice things to say about the culture of sloppiness, sloppy toppy, as was the phrase we used on our last deep dive on Supermicro. And this is pretty bad. Like the way their whole debacle began in 2019, where they got delisted and launched a bunch of market cap. The first time was they delayed their
and
K.
What is the K for some of those who may not be familiar with that lingo?
So it's a drug. It's a party drug. Special K. Different dealer. So yeah, 10K is an annual report. They have a June fiscal year, and so they said after pretty quickly after that report, within a few days, stock got nailed. And then like several days later, they had to delay the K. Like, to me, it looked kind of like perhaps the auditors saw the Hindenburg report and said, "Oh, wait a second, everyone's watching. Maybe we should go look at this again." And once again, big moral hazard for the auditor. Like, essentially, they're the ones who are supposed to be doing a good job with the financials, and they're blessing it and giving an opinion, saying that it's all in the oven. And suddenly they're like, "Hey, there's some problems." And like the last time they did this, auditors made like $100 million off of Supermicro over the course of 2 years. So like they sure as hell want to find something. So what's just really amazing to me is that these guys potentially could have another delay, another delisting. What's way different this time is their business is so much stronger. They're doing 30 billion in revenue, and they're not declining. So like they're growing like 60+%, and they're kind of like poor is kind of like trapped in the pickup truck with Charles Liang and can't get out. until somebody else pulls up from Dell, in their Porsche, right, with the new liquid cooling. Because right now he got no other option. So like, I don't know how this plays out, but like, if I'm a betting man, just based on history, like, where it was incredibly well sourced and said, hey, basically same shit that happened prior to their listing last time is happening again. And oh, by the way, they're diverting product to countries like China through intermediaries, and and it's just incredibly, it sounds like a lot of very risky behavior. I mean, candidly, from what we've seen, like rarely does it end that badly. Last time Charles had to write a check for $1 million and admit no fault. So I kind of don't blame him for being sloppy again. So I just don't know though. Investors just may be more forgiving now. What will not be forgiving is if they actually get caught, shipping into China. Like this is now like equivalent of nuclear, weapons, national security. So I'll stop there. I had a lot to say since it was a passion project for me on our episode 1. But I'd love to hear you guys' thoughts.
Yeah, I mean, I guess what's interesting, one, I mean, I think Hindenburg, has a pretty good track record, right? So that's one thing to point out. When they've come out with their short reports, like the other, I'm trying to remember off the top of my head who else they've profiled.
Might have been like Long Top Financial or something. Like that was a big one. There's Citron too, right? So there's a handful of these firms that. But Hindenburg's also being investigated right now for pump and dump.
Yeah.
Not to be confused with my glory hole activities. Sorry. Had to get the glory hole. Remember, the glory hole people are paying us per engine, so we got to get that. With the glory hole.
Do you think it impacts their like fundamental business case though? Like it still feels like the tailwinds around AI are really strong. Like
exactly.
I haven't read the Hindenburg report, but like what I mean, did they say anything about like the fundamental business model being soft or
some of these customers are showing, they're getting product that's like 20%, just not functional out of the box. By the way, that reminds me, I worked at Best Buy when I was 16 years old, and like that would happen with Packard Bell PCs. When it happens with servers, not as cool, not as forgivable. And they're just doing this stuff. And so, like, basically, yeah, short term, these guys had a bunch of liquid cooling stuff available early on that nobody else did, and it's going to take other, but there were like 15 vendors in the NVIDIA booth at Computex demonstrating liquid cooling. Dell is out there, that we talked about before, I think, just bidding like crazy, and Jensen saying how great Dell is. Like everyone wants off the Supermicro bus. It's the crazy girlfriend, right? It's the crazy young girlfriend, and you're really lonely, and you got nobody else, but the instant the high school sweetheart comes back, Dell, they are kicking this crazy chick out of the truck and losing their phone number. Like, so yeah, I feel like they probably got another year in Crazy Town, but with Supermicro, but like, also what happens if China, like I think the government could step in here and be a real spoil sport, whether you like the company and are happy with the product you get or not. Like, you can't trust Supermicro to not ship to our global geopolitical adversaries one of the most sensitive technologies in the history of mankind. Like, like that seems kind of,
Yeah, I guess,
So
but the reality is like even for NVIDIA chips, those are finding their way into China as well. Like there's a bunch of intermediaries that are buying chips, servers, InfiniBand. Like it's not like China's not getting anything that we don't want to sell it. You know what I mean? Like
the only way they can get that through though is through people, basically the server OEMs, right? Like, it's the server OEMs and the VARs that resell them. Like there's a handful of hands, where they can lie, but like, I don't know, if it becomes obvious these guys are being flagrantly negligent, they could get special treatment, right? Like you can just see that HP and Dell are on the same footing as Supermicro in terms of trust, right? These are white, shoe suspender companies. HP and Dell are they're poster children for compliance. Like Charles is the Donald Trump of servers. Like this guy is, you don't know what he's effective in some way, right? But he's aggressive as hell. But I just think it's not going to play out well for them. Your buyer here sounds like Bruce. You guys are both buying this thing.
No, I mean I'm on the sidelines. Like I haven't read the reports, and I don't know enough to be dangerous, but I probably know enough to lose all my money. So I'm on this here, but I just wonder if it. I mean, there's definitely going to be either like a buying opportunity or a selling opportunity. Doesn't feel like the stock's going to just stabilize here. So I don't know. Maybe you should buy like a strat and try to work both sides of the trade.
Yeah,
Yeah, and a straddle, for those who's
I've
not
paid extra
familiar,
for
right? You
straddle.
profit when there's a lot of volatility, so you don't know if it's up or down, but if it moves, you'll make money, essentially. And I agree. I mean, I think it's
And
hard.
they also
I
sell
haven't
them.
touched the thing, to be honest with you. Long term.
That's what she said. I'm gonna say, by the way,
Well,
you can also buy a
usually
straddle at
when it's hard,
Tootsie's
it
for
gets touched. But anyways,
300
oh,
Oh, I like to use the straddle. Whew, I love it.
Speaking of straddles,
Um,
how about that company Oracle?
yeah, let's straddle old
Thanks,
Larry.
Bruce, for teeing me
And you
up.
wanna do your victory.
So I'll take my victory lap here. Oracle reported this week another blowout quarter on the back of OCI. So their OCI, which is their cloud, grew 45%, well above the 20-30% we're seeing from other clouds, albeit they have a much lower base. So they're starting at 2.2 billion of revenue versus a lot of the other ones. The other thing that probably got people excited is they announced another partnership. So they've been partnering up with the big public clouds. So AWS was the one they announced this time, allowing folks to kind of tap into their traditional databases they may have in Oracle through the public cloud and through these other providers. And so that opens a big new market for them and their services. But overall, very positive. Stock, since we first talked about, is up over 40%. So that's been a nice winner. Ellison had some really interesting tidbits as he talked about AI, and he was really, pumping it up. And I think as we were talking before we hit record here, I mean, Ellison's probably not the most humble of, of individuals.
Mildly promotional. I still struggle with this. First of all, they weren't allowing compute instances from Amazon before. They're just now doing that. I mean, Amazon's always been the devil, right? They're the incumbent that they're trying to
Well, they've got a competing
unseat.
product, right? Like Amazon has S3
Yeah.
databases, right? And so in some ways, they're competitive, but people have a lot of data stuck in Oracle's related. So, as you're thinking about AI and you want to train on your information, um, AWS is opening up to saying, hey, we'll allow access, in your AWS instance to your traditional databases that you may have over at Oracle, and vice versa. Oracle's open to it, if it drives more business for them. So I think historically they've seen each other as competitors. Why you didn't see this happen before, but the business case makes sense for both of them now to open the doors and allow each other to kind of operate in that way.
Yeah, it's just interesting that I was reading too that, and we kind of used this argument before that I'm very skeptical of. That basically they were like, oh yeah, since they were kind of late to the party, that they benefited from the fact that they have a lot of new data centers, and so like there's been such a massive and sudden architectural shift. They were kind of under the hoop a little bit, and I kind of buy that to some degree because the last 18 months has been just so crazy pants. Like there've been such a change. I mean, I just feel like Oracle's kind of like Cisco. Sorry, any alums that may be listening, or Dell or Applied Material, like this big lumbering tech, where like basically nothing innovative ever fucking comes out of them. IBM is sort of classic too, just like the slow motion
It's of
death,
the
right?
same
Where they just
era of
learn
all
less
those
than like
companies, for sure.
yeah. And so it's just like, do you really fucking believe? But the thing is, the public cloud is not really about innovation now, right? It's compute by the pound, right? It's all to a certain extent, it's commoditized, but you also need to really trust that vendor and know that they're gonna rock solid infrastructure. And so I don't know there's anything really special about what they're doing from a design perspective or what. I kind of feel like they just had a lot of enterprise relationships. Again, they have captive ERP customers, and so they were so late that they were able to kind of invest heavily at a good time. But like,
Yeah, I think there's a couple things going on. I saw Gordo, you wanted to jump in, but I mean, I think also, they are being aggressive on pricing as well. Like there are good margins in the cloud. So I know, for example, a company that I've been employed by has looked at making the move over to Oracle to save costs. And so there was a cost difference there that they were willing to offer versus, being on AWS as an example. So it was a real consideration, thought about, looked at, the functionality was there that we needed. But it is a big lift, so we didn't do it. But end of the day, if you're a startup, or you want to do AI workloads, like there's an argument that maybe you give Oracle consideration you wouldn't have historically.
But I think the only reason that people are using OCI is like one, I think like the infrastructure that the hyperscale web companies have built is important. Like people use Amazon because they do have the best technology offering on top of it. They have a bunch of features, they have a bunch of open source technologies. It's the easiest to use out of the box. They had a big first mover advantage. I think though, like for better or worse, AI sort of levels the playing field. Like most of the developers are just probably using OCI because they get access to compute in a way that they can't on Amazon or Microsoft, or potentially because it's cheaper because of both. Like I think like the maturity of the Amazon cloud is really the differentiator in a lot of ways, and the installed base of the Azure cloud is what's obviously differentiated them. And OCI is just like coming in at the last second and probably offering AI compute in a way that others can't or won't. And so they probably view this as an opportunity to steal market share, but it's just like they're offering raw compute as opposed to any of the other services that I would say the other clouds are offering, and probably more developed.
Yeah, and they're claiming, I mean, the data centers they're talking about building now are going to be the largest, in terms of numbers of GPUs out there. So, I mean, they're talking about massive, massive size and scale.
Well, that's the thing. Like for large language models, it really just comes down to scale, like the size of the compute. You just need orders of magnitude more compute. You need orders of magnitude more GPUs, all co-located in the same facility, and that's how you get to a scaled model. And like, there's only a few places that you can do that. You need people with tens of billions of dollars. You need like infrastructure to support it. So
Yeah.
they're one of the only games in town, and like I think they're being smart. Like Larry Ellison obviously is not an idiot, and he realizes this is maybe his last shot at stealing some of the cloud
Oh,
share.
yeah. And I will say, compared to some of those other dinosaurs, like Larry Ellison, I think is, you were mentioning him front, Gordo. Like Larry Ellison is still, he's the CEO founder. He's technical. He's still involved in this company. Like most of those other founders have moved on. Like I do think he's a smart guy. He can actually drive. Like there's something that a founder can drive that a professional CEO coming in after can't. And so they can take big risks and take their shots. Like they do large acquisitions. No one's pushing back on Larry. Safra Katz and the board gets out of the way and he's doing what he wants.
That's Super Micro is. That's a founder of a company. Founder
Founder
mode is
mode, yes,
different, you
exactly.
know. Like
Larry
Let
Ellison is
me
the ultimate founder mode, and also he's used more Botox than your third wife, Gordo.
Yeah.
wait a minute,
He's got to keep
she
his
got me
up with
I
his
think I look
20-year-old
good.
girlfriend. Uh,
I use it on my balls. They're like it's like an egg. It's like so smooth.
eventually it'll all fall down.
Baby, I like it too.
So let me maybe close that section out by just like his quotes on AI, just to kind of pump up, give our annual or our per episode pump of AI. He said, "There are a few large technology companies and possibly even one country that will battle out for AI model technical supremacy in the next several years, spending 100 billion each." And he said, "There's no signs of AI boom waning anytime soon. So if your horizon over the next 5 years, maybe even next 10 years, I wouldn't worry about it. This business is growing larger and larger. There is no slowdown or shift coming." So for
Shout
everybody
out to
that's worried about
Jensen.
Nvidia and AI and all the kind of volatility that's been in the market, you know, the CEOs have been pretty consistent. No one is sending a different signal, right? It is all, full steam ahead. So,
Well, if Larry says that, then it must be okay.
oh, they all do. But end of the day, usually you have someone calling
He's got
BS
no
somewhere
interest
who's
in being able to
maybe on
hold
the
up.
sideline and they'll point to the
I mean,
weakness. Like, I'm
basically,
not hearing
come
a
on,
lot of
man.
it, to be honest with you.
I'm not sure what the actual catalyst was, but I feel like everyone kind of woke up and said, "Hey, wait a second, we're not sure about the economic return on all these crazy models that people are building." These, I mean, I feel like nothing's really changed, and suddenly people are just like, Mr. Market just woke up. We've had this debate on the show. There's definitely some companies that are making money off AI, and they're going to go public at some point. And there's definitely evidence behind the scenes of validation, but there's also a lot of speculative spend. So why are
What
people
was the
just
catalyst?
negative now? I feel like there was no particular. Maybe I missed it. What was it? It's like everyone woke up one day and just said, "You know what? I'm just not sure about these LLM models. They really going to get a return anytime soon?" And now Goldman's, out there.
I think it's just like people are taking like a breather, just because like in the last kind of like year and a half, it's just been one direction, and so people I think are like looking for any reason to like poke holes in this like architectural shift.
Where's new money to work, right? Like I have a friend who made $1 million on NVIDIA.
Well, I think like
You know,
isn't it? There's some
years
crazy number like 30% of all like NVIDIA employees are like have like more than $10 million in net worth just in the stock alone. It's I mean, like
Yeah.
I don't think there's ever been like an amount of wealth creation that quickly, maybe at any company ever.
Like who's putting more money to work in NVIDIA here? Here's who's like, I'm buying like who hasn't just isn't already just to the hilt on NVIDIA at this point? Who's dusting it off and going, now maybe it's time to get in NVIDIA? Like I just feel like at this point,
I I think people are still going long in Nvidia as much as they can. Like I think you have people on like Main Street who don't even know what Nvidia does, and they're still putting money to work in Nvidia because it's such a big name right now. Like
Wall Street
it's
bets
like you know how they
finally
do the Microsoft, they do the like the little ticker at the bottom of Microsoft where they show you like just the market. They show you like Nasdaq going up just at the bottom of everybody's screen. They show the Nvidia stock price and like the Nasdaq and the S&P, and that's it. Like it's like in the social consciousness of
well, 3
everybody
trillion in
right
cap.
now.
Like
Like
if you just
it's
go back 10 years, how many companies would you have to line up to get 3 trillion in cap 10 years ago? I mean, was Facebook public yet 10 years ago?
right. But like there's I mean, I don't think there's a doubt in anybody's mind that there's a like 5 to 10 trillion dollar company out there right now that we'll see in the next couple of years.
Well, I
So
mean, we mean,
like
well, I mean, Nvidia will be obviously, but like, I think that's kind of the end point. It's sort of like
right.
another company, you know, maybe that'll triple. I guess. I guess it feels kind of low risk if you're willing to rip and winkle this shit because it does feel like AI is real. I agree with Oracle's comment, Larry's comment. You know, I just feel like there's so much, and I just wonder how long we're going to be sideways before this takes off again. And anything last thoughts on I hear obligatory debate. So Kamala took poor Donnie to the woodshed and gave him the Kinte treatment.
I will say though, on the chip discussion that they had during the debate for about 30 seconds, like Donald Trump Donald Trump did get the better end of the bargain there. She was like, you know, the U.S. is is selling all these chips to China and blah blah blah, and Donald Trump was like, the U.S. doesn't sell chips to China, you dumb fuck. They all come from Taiwan.
There you go.
It was like one of the better moments in the debate, I thought, for Donald at least, because he was like, who would have thought he actually knew that chips actually come from TSMC? Like it was just shocking. I mean, and he was right
What's shocking
too.
is that we have a
Like,
candidate that you're just like,
so
he got a fact right. He said something that was true. Yet I've heard you advocate for him because he's like, well, he's going to keep my corporate tax cuts and let me continue my M&A gravy train. Like you want that sorority system running, you know, that pussy train for M&A.
dude, we're gonna have the last 4 years, which isn't like the best situation. Look, if they had, I think if we had better candidates on either side, I could be convinced. Like if we go back to maybe Barack or we go back to like
Literally
Mitt
anybody
Romney. I guess we
except
never
you
had him,
just
but
pull any. I wouldn't pull G-Dub back out. I'd leave him back on the shelf. But like, kind of anybody else.
yeah,
You know,
yeah, I agree.
So Bernie Sanders is what you're saying.
No, I mean, no.
I just, you know, I look forward to just my UBI and just, you know, Bernie's going to triple my food stamps. You know, I'm going to be able to.
Hey, the
He's going to
economy
make.
was pretty good when the lower class was getting printed money right during COVID. So
I think we should introduce legislation to allow people to buy stocks with food stamps. You know, to invest.
well, the danger of the Democrats winning the White House, as we were talking about before, is just the taxes and also the regulation, right? And so, as much as you know, Donald Trump may be an idiot, he has friendly economic policies. And so, I guess the question I pose to you two are: do you get nervous about the stock market if the Democrats win here come November? And the taxes being corporate taxes. Also, she wants to raise capital gains taxes on individuals,
Yeah.
right? So that's a double whammy there.
Eat the rich.
And then, I mean, we've already had it, but like the M&A environment has been extremely challenging, right? So like
Yeah.
Lena Khan is running wild, like shutting down every merger, looking at everything, making it difficult.
What was the deal where you're like, God damn, and these
She
commies.
killed Google Wiz. Like the reason that it didn't go through is because of like the regulatory heat. They didn't want to deal with the regulatory heat on it. Like that was at the one that deal. I
Google's
heard
not even in
that
the
deal was
security
at like the
market.
1 yard line. I heard that deal was
weird.
at the 1 yard line, and they wouldn't do it because of the regulatory pressure.
Wow.
Like
poor Google.
That would have had massive implications for
Yeah.
the cybersecurity universe.
I
Like,
have no problem with them killing the Adobe Figma deal. Like that one, to me, like I would have killed that deal. Being about as liberal as you could in that job. But outside of that, like a lot of this has been really difficult to be honest with you.
All
they're
right,
fighting
so
everything. They're fighting drug companies merging,
Amazon
grocery
and like
stores
iRobot,
merging. Like,
for goodness sakes,
yeah, I mean, it just they're taking a machine gun to like the M&A world. It's just it's insanity. I mean, like they're fighting PE companies from acquiring companies. Like, there's just no point or purpose to what they're doing. Not only that, they're losing everything.
Yeah.
They've lost like every single case. Like it's just
so you're
like
saying that if
scaring the
only
ecosystem.
we would let people do these deals where they come in and fire half the workers for synergy, like that's something that's good for the economy. It just sounds like very self-serving what you're saying. Like I get it. We're all like kind of like long
No,
M&A. Like we all want M&A because we profit
It
from it.
drives
But like,
innovation. It distributes
yeah,
innovation faster.
inefficient businesses are like not going to work over the long term. Like
does
it's
it need to be Google though? Could be somebody else. I mean, Google's had a lot of anti-competitive behavior. So has Microsoft. So I kind of don't feel very sorry for Google. There'll be somebody else going to write that check, right? Wiz's value. Somebody's going to make Wiz people rich. There's got to be a joke in here about taking a Wiz somewhere in here.
But I mean, all these companies get disrupted, right? Like end of the day, I think capitalism works. You're a monopoly, you have outsized profits, like especially in technology, eventually you're going to be disrupted, right? You can sit there and say Google's a monopoly. Google probably is a monopoly, but like end of the day, like their business is more at threat today than it's ever been, right? With AI. Do they survive that?
And they're doing it to themselves. If that continues to amaze me, and they're like, yeah, let's just fuck our search results. Here's our AI answer. I don't need the search results. Like that's just like I don't know how that
They have
works.
to. They have to play the game, right? To stay relevant. So
Clayton Christensen, there's your lemma. I paid a lot for that word in NBA. It's really served me well. So anyway, all right. I think we've beaten this news horse to death. Let's get ready for the main event. All right.
let's get ready to rumble.
Let's get to Crowdstrike. So, as is our tradition, the bull goes first, and so we have a security expert on the team.
Ah, so clever. Bird is the word. That's
there it is.
I
Timberland,
like it.
right? Bird is the word. 90s rap or 2000 rap knowledge coming into play here.
That's right. Well, let me start off with a little description, maybe of the company to just level set where we are. So the name of the presentation is "The Bird is the Word," and we're talking about CrowdStrike today. So CrowdStrike is maybe the best cybersecurity company platform in the world.
Wow.
It started about a dozen years ago, and they've built a product off of a single core offering that they started with around the endpoint, and they've expanded that offering ever since. So maybe to back up even further, people use antivirus on most of their computers, both in terms of commercial environments as well as in terms of home or residential environments. Back in the day, we used to use Symantec or McAfee, and we used to upload their latest virus protections and pay them $10 a month. And since then, we've sort of evolved in a lot of ways to use much more fully resourced agents as endpoint detection and endpoint protection. CrowdStrike started as simply as an endpoint protection platform. They built their architecture a little bit differently. So they use a single agent on the endpoint to deploy all of their services. And so as you think about commercial environments today, oftentimes people are using anywhere from 1 to 20 agents. And these agents are all very, very consumptive on the endpoint. And so they can start to weigh down the computer with overhead. They can conflict with each other, and they can make it very, very disruptive for a knowledge worker to be able to do their job effectively. And so we'll get to how CrowdStrike came to this in maybe a couple minutes, but one of the key differentiators for their platform is that they use a single agent to do everything.
So one James Bond.
One James Bond on your endpoint, on your computer, that enables you to protect yourself against everything from signature-based attacks, so attacks that people have recorded and have made notes on, and that they filter out into the universe of folks that are looking to protect people's computers.
So like known attacks. You've seen it before. It's happened.
Right, exactly, to what people call zero-day attacks. So if I come up with a new virus and I want to deploy it against
Sorry.
Gordon, or I want to deploy it against George, that would be an attack that nobody had ever seen before. In order to protect that, you don't have a signature to look at and say this is something that we've seen before. And so modern day agents and modern day endpoint protection really relies on the ability to look at heuristics and use really machine learning and AI to figure out if something is being malicious on the endpoint. Crowdstrike is a pioneer really in that field in a lot of ways, and so they developed this architecture that allows them to be deployed on endpoints and understand if there's malicious activity happening on those endpoints in real time, things that they've never seen before. And so it really is a next generation offering. The other piece that's super important about Crowdstrike is that it's a lightweight agent. So oftentimes
It's
the
James
kind of the
Bond on a
light
diet.
James Bond on a diet, super lightweight. It's cloud connected often, and so most of the intelligence actually happens in the cloud as opposed to actually on the actual endpoint. What happened in kind of, I would say, like the pre-existing architecture of endpoints was that you would effectively have a record of all the different types of signature-based attacks. You would then connect to the internet and compare those to the new record of all the signature-based attacks, and then you would use those two records to see if anything malicious was happening on your endpoint. And that ends up.
For your time.
Oh, it's Austin Powers. I thought it was like an early James Bond, like a
No,
Sean
no. I
Connery
mean, they
James
were
Bond
making
or
fun
something.
of like the female agents that were always in the James Bond movie, and she was like,
Oh, I
he's like,
gotcha.
"What's your name?" She's like, "A lot of vagina." Can you say that again? A lot of vagina. Anyway,
Yeah,
sorry.
it's a play off of it's a joke about pussy
um,
galore. Yeah.
so getting back to CrowdStrike, so CrowdStrike has built this really interesting offering that they started to take to market in 2011, and on the back of that offering, they've really built just an incredible platform of different cybersecurity solutions that tackle everything from your endpoint to your network to your cloud security to your mobile security. They have 24/7 managed service. They have threat hunting service for organizations, and they've really become sort of a one-stop shop for enterprises of all sizes to come and solve their security needs, and not only do it in kind of like, I would say, the bare minimum method, but really build kind of a best of breed offering across a host of different modules that enterprises are looking to use. And it's really become, this monstrous platform, I think, in cybersecurity. And it's been a beneficiary of a lot of different trends, I would say. If you think about kind of the last 15 years in endpoint security, a lot of the kind of larger players that were originally kind of the first generation of next generation players went away. So companies like Cylance got acquired, Sophos got acquired, Bit9 Carbon Black got acquired. And so what really ended up happening is you have these two legacy companies, McAfee and Symantec, that also, kind of got acquired as well. And then you had a next generation of platforms, mostly CrowdStrike and SentinelOne, that really built what people consider kind of the leading edge or the bleeding edge of technology on the endpoint side. And from that technology kind of kernel, they were able to build a host of different offerings. And we'll talk about it a little bit more, but CrowdStrike has really picked up the mantle there in terms of expanding from a singular base into really a full-fledged offering that covers your entire architecture, sort of end to end.
So is it fair to
Maybe
say, maybe just to simplify, like what they do differently, like where you were describing historically how they would match these known attacks? They're looking for anomalies, and what an anomaly might be is like your computer suddenly starts acting differently, so it starts sending all these outbound requests that it never used to do, and so that would seem odd, right? That it suddenly picks up this behavior that it didn't have before. Is that kind of an accurate like description or example maybe of what they were doing differently?
Yeah, I think a lot of the technology that people have used historically and maybe even today is when you deploy some of these agents into onto an endpoint or into a network, what they do is they sort of begin to figure out what the baseline looks like for that network, like a healthy network effectively. And so they're measuring that baseline and they're monitoring that baseline. And then after they have kind of the gold image of what that baseline should look like, if things that are anomalous start to happen, that starts to trigger, the
Alerts.
endpoint to alert effectively the network, to alert the user, to alert the SOC, which is a security operations center in an enterprise, so that people know that something is awry. I would say like the historical approach is just not based on behavior in the network. It's more based on what they've seen in other networks. And so I think it's a combination of those two things. One, which is like learning how each of these idiosyncratic networks in an enterprise is obviously much different than any other network. So it's learning how those idiosyncrasies work and baselining those so that when something does change, they're able to alert. But also it's taking kind of the group knowledge of all the enterprises that you cover to really understand, like, this is something that's happening in somebody else's network. This is something that we should also, be monitoring kind of across our entire enterprise base. So they get smarter both kind of locally, and I think they get smarter globally, and building those two different parts of the practice into one offering, I think, is what really creates something compelling. So they're able to stop 0 days. They're also able to, look at kind of the signature based approach, even though they don't necessarily take it themselves.
Makes sense.
And so with that, let us begin. So the birds of word. So maybe a brief history on our man, George Kurtz, who, has built George is right. That's right. No family relationship here, unfortunately. We probably wouldn't have this podcast if there was, though. So.
I mean, this is how I'm making ends meet, by spending money on our podcast.
Yeah. So George, grew up in New Jersey and graduated. I forgot from where he graduated from, but he started as an accountant at PricewaterhouseCoopers, and he just for some odd reason in 1993 got thrown into the cybersecurity group, and 6 years later he basically was writing a book about how interesting cybersecurity was for the entire ecosystem. After that, if you flip to the next slide, he founded services. He founded a services company called Foundstone, and Foundstone went on to develop services for the cybersecurity world. They eventually got acquired by McAfee in 2004 for $85 million, which back in 2004 was actually a lot of money.
It's equivalent of $10 billion today. No.
Yeah, something like that. It's like 7 NVIDIA Blackwell chips. But he became effectively Ben Affleck in The Accountant, as he evolved from sort of a PricewaterhouseCoopers normal analyst to a founder who had sold his company successfully to McAfee as an accountant with an accountant background. After spending a couple of years at McAfee, they promoted him from a founder accountant to the CTO of McAfee, which is one of the craziest career trajectories you'll ever see. This guy was working in Excel models in 1994, and all of a sudden he's the CTO of McAfee, which at the time was a leading edge cybersecurity company. So he's at McAfee as the CTO. He's working there for several years. He's on a plane, according to him, sitting next to someone who's doing a McAfee update on their computer next to him. And it takes that person 15 minutes to do the McAfee update before they can start working on their computer. And that's when he realized he had to get the fuck out of McAfee and he had to start his own endpoint company. And so that's where, if you flip to the next slide,
this is a great founding story, by the way. So, I mean, it's got to be worth $200 billion just based on this alone.
I mean, well, we'll see. We'll get there. That's when we get to George 3.0 billion, which is also kind of coincidental because that's effectively where they peg his net worth, and they also are around a $3 billion revenue company today. So it really was, a transformation, right, from the PwC accountant to the CEO of probably one of the more, if not the most transformational cybersecurity company we've seen in the last 15 years.
Well, for the record, not to give away too much about myself here, but my dad's name was George, and he was an accountant at PwC at one point in time. So you never know.
Ooh.
There you go. I might have a large inheritance coming my way. Let's go.
He does look a little like you, but not.
Is that a real? Which one's the real picture of him? The blue suit?
Yeah.
He's pretty suave. I mean, $3 billion makes you look pretty suave.
He looks. I mean, look, he looks good for being almost 60. If we put, our boy Larry Ellison up there at 70,
yeah, they're all getting something done. Money
Aren't
is
we
the
all?
fountain of youth,
Aren't we
right?
all?
Jeff Bezos believes that. All right.
So flipping down to the next slide. So we talked a little bit about this, but basically, CrowdStrike has built a really brilliant concept, right? They use this Trojan horse at the endpoint to basically architect something that was really unique in the industry in 2011 and use that architecture to get on the endpoints of thousands and thousands of companies and hundreds of thousands of actual endpoints.
Isn't a Trojan
Go
horse
ahead.
a virus?
Yes.
I'm just checking that. So they're deploying viruses into their customers.
It's a white hat Trojan horse.
All right.
And they were able to go in and really deploy lightweight agents across enterprises of all sizes, but especially scaled up enterprises, and then start to expand from there in terms of deploying things like identity security, deploying things like cloud security, deploying things like forensics and search and mobile security. And then really one of the accelerants to all of that was building a managed service that operates 24/7. Most of the time, enterprises just like to outsource a lot of this to other people. So when things go wrong, they can choke somebody else's throat instead of, their own. Don't get any ideas, Gordon. But,
Hey, man. David Carradine, he just, he needed a better safety word. He had the right idea, man. He was riding that dragon in Valhalla. All right.
but nonetheless, what ends up happening, I think, is not only are you able to expand, but you're also able to create something really, really sticky. I think that at some point, George is going to bring up sort of this blue screen to death Microsoft incident that was probably Microsoft's fault. Nonetheless, it is one of those things that we can talk about. The collateral damage was almost nothing to CrowdStrike and really won't impact their business in any
Hasn't been
meaningful way.
recognized yet.
If anything, it's a massive buying opportunity. Nonetheless, we'll come back to that in a second. But CrowdStrike was able to create this threat graph that allows them to do things that really other security companies can't do. It allows them to do it in a more lightweight way, and it allows them to do it with a single agent architecture, which is also something that really hasn't been duplicated very much, other than by a couple other kind of leading next generation players who are scaled, but not nearly at the scale of CrowdStrike.
I have to say, so
George.
far you're not selling me. You've got an accountant playing CTO who's inserting Trojan horse viruses into your computer and dealing with blue screens of death. Like, I'm not hearing anything here that's making me excited about putting this on my endpoint. I'm just saying.
Okay. All right. Moving on. Moving on. So we'll get to the nitty gritty details in a second. I mean, it's really just it's overwhelming. Like, CrowdStrike's ability to grow is like virtually unparalleled at their scale. Like, this is like quite quintessentially probably the best enterprise software company in the world potentially. Like, I don't know if there's any businesses that are better. Really at any level, but we will get to that in a second. Nonetheless, they've been able to use a single agent that you see here and build a bunch of stuff on top of it: a data layer, an AI layer, a workflow layer, their MDR, their CDR, their threat hunting. They've deployed the Charlotte AI thing, which is like table stakes, I guess, for every company now to have some sort of AI solution. But it's really their ability to develop and deploy these solutions and then sell them as modules to the enterprise that's really very interesting. We'll get to in a second, but CrowdStrike has been able to drive NDR in a way that most companies would only dream of, and that shows up in the numbers. So if we skip to the next slide, CrowdStrike is building a business in really maybe the best market in the world, sort of. It's $100 billion market. I mean, there might be other markets in like AI or something like that might be even bigger. But if you skip to the next slide, I mean, really, this is the best market.
I think Shopify claimed they had a bigger TAM, but sorry, keep going.
Who had a bigger TAM?
Shopify, didn't they? What was? No, maybe they didn't. It was.
I mean, like, if you have like an 8% gross margin business, yeah, your TAM can be like $1 trillion and you still won't make any money. This is like an 80% gross margin business with a $225 billion TAM. Like, they are barely scratching the surface of like what the opportunity looks like here. And even though, like, I think we can all agree the AI native security platform, that TAM feels like a lot of bullshit. But I think that like the fundamental point remains like this market opportunity is really enormous. I mean, security, as opposed to a lot of other budgets within the enterprise, I think is more resilient. It is something that you can't really compromise on if you're an enterprise of any scale. And the fact that like AI has become so prevalent across kind of the adversary networks, like the number of threats, the volumes of threats, the sophistication of threats is only getting higher and worse. And so security is becoming even more fundamental. And it's a huge tailwind for the entire industry, especially the leading player in the industry.
Well, if they keep deploying,
Yeah.
Trojan horses in their customers, that must help the TAM grow. I'm just saying. All right, I'll drop it. I'm trying to let that one go, but it was just too good.
All right. Clearly, George has very little actual material. Moving on to the next. Moving on to the next slide. Like we said, like we talked about, sometimes, guys, the best are the best. Skipping down to the next slide.
Wait, you got to describe in your for our audio.
Oh yeah, sorry for our listening audience only. I am showing the goats: Steph Curry, LeBron James, and Kevin Durant wearing their Olympic medals after winning the gold in Paris this past summer. And then if we skip down to the next slide, and Crowdstrike might be the best ever, and that's our guy Michael Jordan in the Dream Team uniform throwing up a basketball. So the stakes are incredibly high for the rest of the presentation, but I will tell you that I do think that they could quite possibly be the Michael Jordan of enterprise software in his prime.
Good ass, Steve. Very good ass, Steve.
And Teddy KGB shows up. So, this is like I talked about before. This is really a best of breed company with best of breed growth. So on the left side of the graph, or the left side of the slide here, I'm showing the revenue over the last, call it 10-ish years, including the projections out to 2026. They're a January fiscal year, I think. So 2026 will end in January of 2026. So it's basically mostly 2025 when you think about what that means from a calendar standpoint. Nonetheless, so they finished 2024, as we kind of alluded to a little earlier, at about $3 billion in revenue. This year, they should scale that and ramp to $3.9 billion in revenue. Next year, they should scale that to about $4.6 billion of revenue. I mean, there are very, very few companies of this scale that are growing this quickly, like in any space, like especially in enterprise space, and not like a, ad-driven kind of Facebook or Google or, Amazon type space where you have like, you have, I think, a different market type potential. Here, this is where you basically are going to market using a direct selling force, or channel partnerships, or some combination of both. And so you're limited, right, by your headcount in some ways in terms of your ability to get to, infinite amounts of scale. Whereas like on an Amazon or a Google or Microsoft, or sorry, Facebook type platform, you have people just come to the website and start signing up and start using ads. That being said, if you look on the right side of the screen, this shows kind of the revenue growth over the last several years. In 2025, the estimate is that they'll be at 28% revenue growth, which is really best in class for all software companies at this point. There are no software companies that are growing faster than 30%. The trade-off is really coming down to efficiency over revenue growth. And so this is a company that's not only like basically scaled at a higher rate than almost any other company in the universe. They're also growing faster than virtually every company in the universe, which is like, effectively, like we talked about, the Michael Jordan of enterprise software.
So if I look at their absolute numbers, just kind of going off the cuff here, like it seems like every year since 21, like they've been growing about, I guess a little slower in 22, but they've been growing about 800 million per year. So 22 to 23, they grew about 800 million, 23 to 24, 800 million, 24 to 25, they're expected to do 800 million. So they're not really accelerating what they're doing there in terms of that number. Like a real healthy company, you would want to hope to, even if your growth rate is coming down because of law of large numbers, like you would hope the absolute dollar amount is still growing. Overall, you're adding more salespeople, you're continuing to penetrate the market. So why?
I think this is intentional. Honestly, I think they've basically focused more on efficiency than growth, just because that's where the market is today. Like the reality is, like this is effectively like a rule. This is basically a rule of 40 company on free cash flow alone.
Don't they
Like
don't they know
like
that the Silicon Valley mantra is grab market share at all costs?
I mean, I think they do. I think they do know that, but I think like the Silicon Valley mantra has changed in the last like 2 years. I think it might be flipping back to like growth at any cost. But I think right
OpenAI
now,
hasn't gotten the memo.
right, I think there's certain subsegments of the market where it's different. But like, if you remember when CrowdStrike went public, like they spiked to like over 60 times revenue, and that's back down to like almost 15 to kind of 20 times revenue. And so
Oh,
they've
they're
seen
cheap.
kind of the ups and downs. They've seen the ups and downs of the cycle, and like I think that the feedback from Wall Street, I think generally has been to focus more on efficiency over the last couple of years. I think they're intentionally making that trade off, and I think if they want to turn up growth, they'll just turn down free cash flow, which they produce in large quantities. We'll talk about it in a second. All right, next slide. But where is this coming from? Where is all this growth? Where is all this revenue coming from? Next slide.
Good question.
Did you go like onto your Facebook to find like what does this mean?
Yeah, it doesn't resonate with me.
Is this your lover? Who is this? Did he send you this?
The short answer is yes. All right, next. Next.
Is he brown? Is he brown?
The truth is, it's coming from everywhere. So we talked about like the modular approach that CrowdStrike has taken. I mean, this is honestly like one of the most compelling slides that I've ever seen in an enterprise presentation. If for those of you that aren't able to follow the slides online, basically it's showing the number of modules that enterprises have deployed from fiscal year 18 to the second quarter of 2024. And it shows 3 different lines, one for 5+ modules, one for 6+ modules, one for 7+ modules. At 5+ modules, 2% of their audience or 2% of their enterprise base was using 5 modules in 2018. Now over 60% of their enterprise base is using 5 modules. With 6 modules, it went from 6% to 40%. With 7+ modules, it went from 18 to 24% in 2 years. I mean, these are like Hall of Fame numbers. Like these aren't numbers that people would ever fuck around with. Like these are like there is like clear demand, like very, very high stickiness in this business, and like a ton of pull from the market. Yes, George.
You can just see. All right, I like it. I feel like I'm back in grade school. So how do they, for just to educate everyone, or how do they sell these modules? Is it each a la carte? Do you know? Is there some bundling that goes on that says, "Hey, you take 5+ modules, we'll only charge you for 2"? Like, is it? How does that work? And what does that pricing model look like? Do you know?
Yeah, they have like 4 different pricing plans basically. Like they have one that's pretty stripped down, that's mostly the antivirus for like small and medium-sized businesses. They have a second one that's like antivirus plus EDR. They have a third one that includes, I think, like one other module, like maybe it's identity
electronic dance music. No, wait, that's EDM.
It plays every time you have a breach.
I think
every time we have a news break too, apparently by Sean.
I think Gordon's in a K-hole, guys.
I really am. I think I got a bad batch. I think I got.
Stop using Perry's supplier. Come on.
I made it in my bathtub.
They basically sell like 4 off the shelf type offerings, all obviously at different price points that range from, call it, I think it's like $50 a year per endpoint to $200 a year per endpoint. There's obviously like pricing baked as we scale. They don't publish those, but if you're Goldman Sachs, you're probably deploying it at thousands and thousands of endpoints, and there's going to be a different price for you than if you're, I don't know, George's truck stop, whatever. So I think it's one of those things where there's obviously a lot of gray area in pricing for enterprise models, but generally like they're selling the base case with a couple, like one module, and then they're scaling from there. But they have like dozens of modules. I think at this point they have like over 23 different modules that are all discrete. And so they're able to really drive those modules into the market. Like, I think it's one of those things where, like, if you can expand with CrowdStrike, why wouldn't you, as opposed to going into the market and buying a new cloud workload
You want best of
protection
breed.
platform?
Well, yeah, that's a good question. I mean,
You,
Cisco
you
owns
don't want best of breed, though. It's obvious here that people are not buying. They think that either CrowdStrike is best of breed, it's good enough, it's cheap enough, and it makes sense for them. Look at the scale that they've gotten in multiple deployments across their modules. Like, it's
I mean, just the poke on this, right? So the skeptic would say, like Cisco showed a lot, sold a lot. Allegedly, the market share reports had all this like, market share against F5 and Riverbed for their like WAN scaler, and I forget what the other one was, but ultimately they were given away for free and allowed them to put in some stats, but like, and I guess it was, good enough, but they just did not. Nobody bought it on purpose, and I suspect that's not what is happening here. I'm just really curious if are they gaming these numbers a little bit? Are they giving away a lot of modules? Is there anti-competitive behavior happening here too, where it's like giving away stuff to keep other people out? By the
you
way,
sound like Lena Khan.
I am.
We gotta a true and try Kamala supporter here. Kamala supporter. Jesus Christ.
Very aggressive. Tommy. I'm right there with JD and Tucker, man. I love those shopping carts.
Look, like CrowdStrike has been showing these numbers, like, basically, since they've been publicly reporting, and they've continued to get stronger and better. Their NDR is really world class at scale. I would say, like, their gross dollar retention is above 98%. So, like, nobody's churning. So, like, that's like, I mean, that's a hard number to game, I would say, because you're basically just measuring who's leaving and who's staying. And, like, if your gross dollar retention's at 98, then you're doing something right. I would say like their net dollar retention at scale is like over 120%. So that's basically a world-class number. So even if there's, like, maybe some differences under the hood in terms of pricing breaks that you would give someone to, expand with a different module or platformize or bundle or whatever you want to call it, like, it's working for them, right? Like, it really makes their product super sticky. And, there's a big debate, I think, in the cybersecurity world about buying best of breed, buying 10 different best of breed solutions, or buying one platform solution that does everything for you. And there's trade-offs, right? In pricing, there's trade-offs in management, there's trade-offs in, like, evaluation. Let's evaluate 10 different identity vendors and 10 different cloud vendors, and then get to a solution that's 5% better than CrowdStrike. Like, it's one of those things, I think, where there's a ton of risk that you have to balance and cost that you have to balance when you're looking at making any of these changes.
When security is crucial, best of breed is the way to go, in my opinion.
Yeah, but the problem is, right, if you have like
Is it?
security is a space where you can't be like have just myriad vendors. So that's where you have vulnerabilities, right? Is at borders, right?
The thing is, though, like, you won't, like, the best of breed vendors in a lot of these spaces are young startups that no one's ever heard of. And, like, you're never going to get fired for basically selecting CrowdStrike or selecting Microsoft or selecting Cisco. Like, you could get fired for selecting some no-name small cybersecurity company that no one's ever heard of. So, SentinelOne's at scale. They're like a $6 or $8 billion company. So you wouldn't necessarily get fired for them either. But, like, there are, like, hundreds of little companies that are, like, doing identity protection better than everybody else. But it's like, do you want to take a chance on those companies? And, like, if something goes wrong, you actually will get fired. They'd be like, why are you not using CrowdStrike?
You're really working hard on your gift searches for this one. What the fuck is this? Ryan, what's his face? The chick that was married to.
I don't know who that is.
Bruce is just trying to pretend like he's 20 years younger than he is, and he's down with, all these memes. But anyways, keep going.
Dude, I got a lot of riz, man.
I hate that word. Jesus Christ.
Stop being so sus, dude. I got a ton of riz.
No cap.
All right, so CrowdStrike's next chapter. Where the hell are we going? They're going to the top. So basically, the way that they articulate their plan over the next 5 to 7 years is they're going to go from being a $3 billion company to being a $10 billion company, and, like, they have the platform
They're only growing
to do it.
$800 million a year. How's that
they have
work?
The team to do it. They have the market to do it, and it's just a matter of time until they get to that point. They've hit almost every single number they've ever published, and the only reason that they're growing $800 million a year. I mean, $800 million a year, right? So they're growing 800 million a year. Let's just say they grow 800 million a year. They say the next chapter is 5 to 7 years. That's $5.6 billion, isn't it?
Yeah, it doesn't get you to
Yeah,
10.
So 5.6 was 3. So you're at like $9 billion. And that's if they only grow $800 million a year.
Yeah,
So I mean, like, look,
they got to
it's
keep it
like,
up.
there's like even on the low end of the base case, which George is articulating, they're still going to get to basically $10 billion. And like,
Just said.
they're only, well, $10 billion in ARR. They're going to the only, so CrowdStrike's next chapter over the next 5 to 7 years is to expand across solutions, segments, geographies, partners, and I think they have the infrastructure and architecture to do it. If you go to the next slide,
well, at least they're focused.
there's nothing that can stop.
This is the NVIDIA of security.
This slide basically shows that CrowdStrike only has 23,000 customers today. If you look across kind of enterprise software broadly, there are several companies both in enterprise software, in cybersecurity as well as the broader enterprise software space that have hundreds of thousands of more customers. Case in point, Fortinet, which is a very, very much a legacy company, has 680,000 customers. So the headroom that CrowdStrike has today is enormous. There is no ceiling on their ability to gain market share. And so I think that just continuing to develop a very compelling offering in this market will allow them to get to scale without real kind of concerns around TAM. Yes, George.
Yeah, thank you. You've noted you've got my question face down. So do you happen to know, like, what is Fortinet's ASP versus CrowdStrike? Like, is that comparable to say that those 680 are going to spend the same amount on, a crowd?
I don't know actually the answer to that. My guess is that it's much lower than CrowdStrike's ASP. I don't think they're offering I don't think they have as like rich of an offering, as many modules, as much kind of footprint with the kind of Fortune 2000 type customers or Fortune 5000 type customers.
Or are they just lower quality customers in the end, smaller SMBs that don't have the same spend? So
they do. I think honestly that's a big market opportunity for CrowdStrike to go after. Like, I think those are much lower quality customers with much lower ASPs, but there's a lot more of them. And so if you can develop and deliver something to an SMB at scale, you can continue to grow your top line pretty aggressively. All right, moving on to the next slide. We're running really light on time here. So the rule of 40. So effectively, CrowdStrike has basically the rule of 40. They're targeting the rule of 40 on free cash flow alone. That's basically no growth. I mean, today they're basically, in the last 5 years, they've been kind of a rule of 60 to rule of 80 type company, which is
what is the rule of, just for those who aren't familiar with that?
For folks on the who don't know what the rule of 40 is. Basically, the idea is that if you add revenue growth plus free cash flow yield or profit profit margin, that should get to 40%. And if you do get to 40%, then you're generally considered a high quality company. That's kind of like maybe an artificial or maybe an official line in the sand that people kind of use as a barometer for strength of the company. So say you're growing 10% and your free cash flow yield is 30%, then you're a rule of 40 company. But if you're growing 30% and your free cash flow yield is 0, then you're not a rule of 40 company. And
yeah,
so
it's like a quick cheat to say, are you actually, you could throw a bunch of money and grow fast, but it doesn't mean you're efficient and that's going to last long term. So it's kind of like a quick efficiency check on.
Right.
Yeah.
It's like a quick way of thinking about, like, is this a high quality company? Like, are they growing efficiently? Are they using their capital efficiently? And how does that translate to the balance between growth and profitability? So the slide shows here basically a new target model that they are looking at based on their previous target model. And like the two things probably to note here are, they're adding 400 basis points on the gross margin line. So basically moving from a high 70% gross margin business to a mid 80s gross margin business, and free cash flow yield, they're adding 5%. So this is a company that's like seeing even better operating metrics with scale. Like, this is a company where they're going to add $800 million a year. So they're going to add $2 billion in the next couple of years, and every single metric is going to go in the right direction. Like it's like you never see that at scale with these types of companies.
Target models are great. You can put anything down. You can target whatever you want. So let's
but if you look at their last target model, they hit all their targets.
Well, it must be
that's the
true.
That's the thing about target models. They're great when you can actually hit them, and they've hit them.
Isn't that what I told you about Lululemon?
And as a reflection of the fact that they have hit their models, go to the next slide. Everyone loves the bird. This is a stock chart showing the growth of Crowdstrike since their IPO, and the stock is up 300%. 300%.
Nvidia laughs at them.
$60 billion
Nvidia
company.
Can't even you wouldn't even see them on the chart next to Nvidia.
Nvidia is not an enterprise software company, though. Nvidia is a chip company, so there's a huge difference. Like this is a company that's grown 300% in like over like one of the maybe the toughest market periods for enterprise software companies in the last 15 years. Not only that, the company has significantly checked down from their high point in valuation because of some Microsoft attack that really won't cost them much at all.
Microsoft attacked them?
A Microsoft blue screen of death, which really won't cost them anything at all. I mean, the total kind of net impact to CrowdStrike as a result of this big Microsoft blue screen of death situation is about $100 million. Like they're going to lose maybe 2% of what they'll do in revenue this year. Like it's a nothing burger.
But yet they're getting more efficient. They're losing customers, and somehow still the target model is getting more efficient. Okay, keep going.
They're not losing customers really at any meaningful scale. Revenue base. Like this is an opportunity to buy the company.
So you could screw your customer, have them sue you in the open market, and there's no fallout. Sounds good.
You wouldn't be able to buy this company in the last 12 months for this price. This is like a golden opportunity to buy a company that really has built.
Maybe you wouldn't want to buy it in the last 12 months at this price.
Scale. What?
So maybe you wouldn't want to buy this company at the last 12 months at this price.
You would, and I'll show you why. If you go to the next slide. These are the comps. And so basically, go to the...
That's a nice looking comp slide.
These are the comps. Basically when you think about these comps, my view is like some of them are interesting, most of them aren't. The reality is like CrowdStrike is a better company than these on every single metric, both from a product standpoint as well as from an operating metric standpoint. And so what I would say is really, if you go to the next slide, you should throw these comps away. Really, the way to think about the company is this.
This is what an overvalued company says.
This is a $5 billion. If you think about the company in the next couple of years, this is a company that will hit $5 billion in ARR. I don't think there's any disagreement from anybody in the market that they'll hit $5 billion, and they'll probably hit $5 billion faster than anybody thinks. They've always beaten kind of the metrics or their guidance. This is a company that's seeing a ton of strength across their industry. There's tailwinds in the sector. And if you think about that in terms of the kind of, broader context of where enterprise software should trade, this is a premium company in a premium space. I think them trading at 20x makes a ton of sense. They've traded there historically. They're probably trading sort of within that range even today. So ultimately, this is a $100 billion company. I mean, like just the rough level math of it is. So like, in my view, they're trading at $65 billion today. There's at least $40 billion of upside. And honestly, over the next 5 years, there's probably $140 billion of upside. So my valuation for this is just the KISS value, which is to keep it simple, stupid.
Well, when you're at 5 billion, you have to be able to justify that 20x multiple, which again means you're still growing fast and you believe you have lots of TAM in front of you. So
I think we just showed that.
200 billion of TAM. So at 5 billion, they've barely tapped their market potential. They're at 2.5% of their market share. So it sounds very believable.
All right. No argument here. Thanks for that terse update on the stock, Brucey.
I don't know if we have any time for the bear case. I think we heard.
And we're just goodbye and say goodbye. All right, I will do my best to keep this super quick. So let me pull up. This is a zero meme deck, just so you just so you know. So I'm sure no sell side analyst has ever used this CrowdStrike striking out. So that's my title. and I have a nice blue screen of death here just staring at me. And I was actually affected by this. I got this screen myself, so I have a PC, and yes, I was working.
Did you churn from CrowdStrike? Did your employer
If I
churn?
had the power to, I'd be a Sentinel One customer right now. But
That's a no for our
well, it
listening
takes
audience.
time.
Nobody
I'm
churned.
I'm talking to
Nobody
IT.
churned. In fact, they still made their payment to CrowdStrike on time. They
Well, we don't.
probably
We got to see our contract out, and we're I
expanded.
work for a tech company. We recover from these things a little faster than some other folks. So, anyways, there's this great award that goes out every year, a cybersecurity conference, and it's called the Most Spectacular Failure Award. And this is a picture of the CrowdStrike CEO accepting that award proudly. So, just to talk to that blue screen of death event.
That's not the CrowdStrike CEO.
President?
That's definitely not. That's definitely not the
Are
CrowdStrike
you
CEO.
sure?
I am 100%
I'll have to
sure,
double
dude.
check who is accepting it. Just because he doesn't have his blue suit on doesn't
Uh
mean
oh. Fake news, guys.
fake news. Look it up. They won this award and they accepted it. So, anyways, most spectacular failure. So that definitely sounds like a company that deserves a huge premium in the market. So here's my quick summary of why the bear or what the bear case is. So the blue screen of death, as Bruce was saying, this, they came out last earnings and said, oh, we don't see much of an impact. I'm going to argue there is going to be an impact. It doesn't happen immediately. It's going to be delayed. And so I think they also didn't do a great job of handling this. In fact, you've seen a lot of news flow afterwards about their customers wanting to sue them, aka Delta and others. And they are winning new customers or helping customers feel like, hey, you've got their back when you cause a problem. I think there's
$100
lots of
million damage.
execution left to prove in the expansion areas. And so while you might have a big TAM, I don't think it's truly proven outside of the endpoint area. And there's still price for
You don't
perfection.
think do you think there's a TAM, or do you
I think they still have to prove that the endpoint business is not the one driving their results. So they're still pretty nascent in a lot of those areas when you actually
Gordon's Mexican internet connection?
Exactly. See? Uh, so anyways, I so technically we'll get to the Delta thing here in 1 second. I'm not gonna spend too much time on it. So I would argue they did not handle this crisis as well as they should have. So what should you do in a crisis? You got to communicate the issue clearly to your customers. And so, CrowdStrike came out, they put out a blog and social media about it, very technical, didn't really have much empathy for their customers. And so I gave them kind of grades here on like, hey, what would an A+ company do in this situation? Well, you know, given kind of the lack of clarity and empathy, I gave them a B- on that front. So they did communicate. Take decisive action to fix the problem. This is probably where they did the best. It was a very simple fix. You just roll back the update, right? I did this actually myself when I had the blue screen of death. So they had 99% of affected computers back online by the end of business that day. So you missed a day of business. Next, you apologize. You apologize profusely. The CEO apologized. However, there were some caveats around. Oh, this is because of X, Y, and Z. End of the day, no, you just need to apologize. So I gave them a B there. The one where I think they've really flubbed this, and I didn't give them an F, I give them a D- here, is accommodate your impacted customers. So they came out and they said, gee, sorry, customers, and sorry, IT professionals that had to like work all night and, respond to all your figure this out for all of your employees. Here's a $10 gift card for your troubles. There were lots of blowback on social media. There was a lot of IT professionals that didn't even accept the $10 gift cards because it was ridiculous. That's almost worse than offering nothing. It's like, someone gives you, a penny for your troubles. It's why don't bother. um, the customers are really impacted. So Delta, as an example, they have come out and blamed Delta. So it's almost like victim blaming here, where they're coming out and saying, Delta, you screwed this up, not us. Well, Delta trusted them with their cybersecurity software. They didn't create the blue screen of death. They didn't recover as fast as others for reasons unknown. However, CrowdStrike is publicly shaming them and saying, it's your fault, Delta. So that to me is horrible. Like, if I'm a IT professional and I'm thinking, what software do I want to go with? I'm a security professional. Do I want to go with, like, we have an incident? I want someone who has my back and is going to resolve the issue. If you're in IT at Delta, like, and you cost the company $500 million, you're probably not going to have a job next year. Let's just say. So
This are we still spending 3 slides on this tiny incident, which is
tiny
$100 million
incident. It
blip
was the biggest
in the
news
company's
story.
history? Like, they already reported after this incident happened, and it's having like an almost meaningless de minimis effect on the business. Like,
So yes,
your
the
own
first
business
quarter,
itself is not
the
going to
the
churn
quarter was
to
already baked.
experience
They're
this.
reporting on a
This is
quarter that this happened.
they're projecting out for the rest of the
Yeah,
year
by the end of
too.
the
It's
day,
going to
like,
have no
the
impact.
next quarter is almost baked too. You're in final. You know how long it takes to
They've
close a
they've
security
talked to
deal?
all of their major customers. Like, this is not going to have any impact on
Listen,
their business.
over time,
Like,
I agree. Like, people are probably not going to pick up and churn, most likely, but I think it's going to slow the momentum of new deals, and I think
it,
it's going
it
to help.
won't. They've talked about that. They've basically said, like, some deals are pushing to the second half of the year, and that's it. Like, it's a
Let's see it.
tiny. It has
Let's
a
see it.
tiny impact on their
I'm just
business.
saying it's still unknown. Just because they wave the wand and say everything is great in their earnings call doesn't mean it actually is
This
going to
is
be.
in and out with the
And
news cycle.
so when
Unless
you
you're
start,
Delta, who's obviously going to churn, like every other of their like 4,000 companies is just going to sit there and like wait for them to like make a fix and just buy their next module. Like, it's not going to have an impact.
if you're coming in top of the funnel, you're a new customer and you're weighing your different options. I've got, CrowdStrike, I've
This
got Palo Alto Networks, I've got Sentinel One. Who am I
this
going to go
isn't, but
with? This is going to be in the
it's
back of your mind.
this
It's
isn't
gonna
like
damper that funnel, and that's not going to be seen for several quarters. So my argument is they are going to get like hit later on, and so yes, it'll look rosy, and people will pass this by, but I wouldn't be so sure about it. Is all I'm gonna
this
say.
isn't like, but this isn't the type of thing that you can just easily like take out of your environment. Like, this is like
No, I'm not
integral
arguing. I'm
to
arguing for
how
that
an enterprise.
pipeline, that future pipeline, new
Like,
customers coming in top of funnel. I think that's where you're going to see it. It's going to be harder to
I don't
close business because of this event for the
I
next
don't
year or
think
two.
I don't think so, because like in the cybersecurity world, for example, like almost 90% of the deals are sold through the channel. If you look at CrowdStrike's channel partnerships, 160 of their partners have made over $10 million on the CrowdStrike offering, which is an insane number. And it isn't something that the channel is going to move away from. They're making tons of money on CrowdStrike. They've built an
Sure.
educational
But does
base in
that
their
channel
sales
also
force
push
around
other
CrowdStrike.
products? It's not usually just a one product channel.
It ends up being they're going with the strongest offering in the market, and like CrowdStrike has been around for 10 years building the strongest offering. Like, it's just
But if
like
I'm
a one-time blip.
Joe IT
Even
guy, and sure, this channel partner approaches me and says, "Hey, you should buy CrowdStrike." I'm going to be like, "Aren't they the ones that caused the blue screen of death? Maybe I'm going to go look elsewhere." That
you're
could
not, though,
realistically
because
happen.
not only do they have the most comprehensive offering, they have the most like well established. Like, this is the type of thing that could happen to any company,
It
right?
can, but it didn't.
Like downtime can happen with every company. It's not like there's any
Uh,
like less risk per se with
Honestly, it was
potentially
not a
other.
horrible event. The problem is it was very public, and I think their handling of it sucked, particularly around
That
accommodating
might be true,
customers.
but it doesn't. I don't think it impacts the near or long term. I mean, it does impact the near term value, but it's like an opportunity. It's like
It's
it's
not an
opportunity to get in.
opportunity. It's a risk
It's an
that
opportunity
I think will
to
play
get
out
into
over
a
several
company.
quarters, not the next one or two, but it's going to be several quarters when that new pipeline is coming forward.
This
So
is
we'll
in
agree
and
to
out
disagree
with
on
the
this. I
news
call it
cycle.
a risk. Will you agree it's risk? It's not risk free. There's not a zero
I
risk that this doesn't impact them.
I think it's the risk that they have articulated in their financial model, which is to say that it's like $100 million risk on a business that's almost $4 billion. in base. Like, that's the risk that it is. It is a risk. It's a 2.5% risk. Like they've quantified it for us.
We will
People have
see.
asked, what's the magnitude of the risk, and they've quantified it.
Yeah. Well, if you trust management, then good for you. I don't think they have complete visibility to everybody out there
Management has
that's
built a
coming
company
new into the
that's
funnel and how this has impacted their view and brand of the company. So
management has built a company that's up 300% from the IPO after this incident. I think we
there's
should
plenty
trust
of
management.
companies that go up and then eventually do go down. So all right. So this is a TAM estimate for CrowdStrike. So somehow I don't seem to see my 225 billion on here. I guess that was 2028, and I only go to 2027 here. But this is courtesy of the Raymond James initiation report. They pull a lot of this from Gartner. And I highlight in 2024 the part that's tied to endpoint. And that's really like the core of their market, like today. Like all of these other modules, it's great that they've got people taking them up. But the one part that they've truly, where the majority of their ARR is coming from, is endpoints. And so the part that you can count on, yes, endpoints. So how big is that endpoint market? Well, it's like 25 billion in 2024. How big is this company? They are almost 60 billion EV company, almost 59 billion or whatever it is, 58 billion. They, their market or EV is multiples the size of the true market that they play in today. And so really you're betting on, you're betting on them being able to execute in these other markets. And I don't think it's proven. So if you look at market share estimates,
I think that I think it is proven. Like a lot of their businesses, like if you look here, for example, like if you look at, let's just take the identity market, for example, like this is a business that's grown to several $100 million in just a couple of years, and it's
100. They have 400 million in identity, right?
Right.
Compared to 3 billion in endpoint. They have 500 million in cloud, 270 million SEM. The rest of it is teeny tiny. All those other modules, nothing. So, like, to me, when you say, are you buying best in class? Is there some bundling going on here? Like, given that you have 79%, 65% taking, 5 modules or more, it really feels like you should have more revenue in these other categories than you do, more ARR, and you don't. And to me, that says, like, they're giving these away very cheaply. So they're leading with the one thing that they really have an edge on, which is endpoints. And then they're trying to crowd out other people by giving you just good enough. And so the question is, end of the day, like, can they really stand up? Can they really stand up in all these other areas in the way they have in endpoints? And I think there's a lot of execution risk there.
I think that even if you used like a sum of the parts here, like the growth rate of these businesses on a standalone basis, you have a company going, like, let's just say it's the identity company, and we carve that one out. It's going from 240 to 413.
But would it do that without the endpoint getting that at a discount because you're buying the endpoint?
You're not necessarily getting it at a discount.
It feels like it.
413 is what their actual revenue is, isn't it?
Yeah. But is that at market price? Because end of the day, like, if you have 65% buying 5 or more modules, and your endpoint ARR is 3 billion, but your total ARR is 4 billion, like, you're not, like, you should have a 50%, if you're charging market prices, right? Let's just say those are all created equal. Like, your revenue should be a lot more than 4. It should be 50% more than 3 billion at least. So
the unit economic, I mean, like, they're not losing money on this on a unit economic basis. Like, they have 80% plus gross margins.
Sure.
Like, they're selling these busises independently.
Security has great gross margins. I agree. But, like, end of the day, I don't know that you're going to be able to charge basis of the products themselves. You're giving them away at a cheap price. And so it's either one.
Even if you're giving it away at a cheap price, it's still adding to your NDR. And even if you didn't have, like, if you can still use the sum of the parts based on selling these at a cheap price or an expensive price. Unless it's hurting their gross margin profile, you can, like, identify and evaluate these companies on an independent basis.
Well, it's not the same. Like, it's not the same as looking at Wiz and cloud security and saying Wiz is charging their best of breed and they're charging a full market price, like those companies are not going to be worth the same. Like if you want cloud security and that's your number one thing, you're going to go to Wiz. You're not going to go to
It doesn't
Cloudflare.
matter. It doesn't matter what the name of the company is. You just have to look at the traction in the market. And like this is the
But
type
their
of traction
traction in
that
the
Wiz
market's
has.
because you're attaching to endpoint, which is what they're good at.
Even if you're using the endpoint to attach the rest of your business to that market, it doesn't matter. You can still evaluate it as an independent business. Like you're just using your advantage to your benefit, but you still have.
But
like,
you're
if you
never going to
carve it out,
recognize the full economic value.
the endpoint market's getting bigger and they're staying like relatively flat. But the point being, like, it doesn't matter if like the numbers, it will show up. If the offering was that bad, then like it would show up in the numbers. The growth wouldn't be there.
Well,
No one would use the service.
once
But the growth is there.
once the
They're
endpoint
basically
market's
doubling
saturated, it will show up in the numbers. And so I think that huge
it.
TAM is not as large as you would.
It won't show up. Like the endpoint market is only 50% saturated by next generation vendors, of which there's Sentinel-1, like Trend Micro. Like there's a whole host of companies that are in that market. The other 50% is like Symantec and McAfee. There's still a long tail in the endpoint market. And like, not only that, if they had a bad offering, the growth from these segments, whether it's cloud or SIM or identity, wouldn't be as strong. It just wouldn't. Like you wouldn't have people using, like there would be no attach rate.
I agree. They're good enough, but I'm just saying, end of the day, like your TAM is really constrained. Going back to my TAM slide here, instead of the 2024 number that Ray J is showing here of like 90, it's really closer to the 25.
It's not. Your TAM slide is showing 150 billion in 2027, which I agree. That's probably the right number.
Yeah, and endpoint is still below 40 on that. The company is 460.
It doesn't, but it doesn't.
That's their market. They haven't proven to me that they deserve. And by the way, a big chunk of that is services, which we should just chop off because low margin, crappy business. No one wants.
How is like? But I don't understand. How have they not proven it to you that they've been able to grow in these other markets? If you go down, they're doubling their cloud business. They're doubling their identity business, and a year-over-year basis at scale. Like those are IPO-able businesses in and of themselves.
You know, like this is not Cloudflare. Like I feel like there's a lot of alternatives.
It's selling to the Fortune 10,000 and like all of them. They have 5% share, and that's a $2.5 billion business. I'm saying they need to get to a $5 billion business to be worth $100 billion. Like
that's multiple.
Yeah, they are.
They have got to continue to prove out this TAM, and there's a ton of execution. They have not proven out observability, which is a huge part of that TAM. I don't care about that services piece of the TAM. The TAM that they have any traction on is 70 billion, and today that's a much smaller TAM. You're counting on that growing, which
go to the next slide for me. Go to the next slide. Each of these businesses is IPO-able. Like the cloud business is IPO-able in and of itself. The SIM business, IPO-able. The identity business, IPO-able. Like these businesses, even the services business,
they're riding on the back of endpoints.
That's not a bad thing. It's like that doesn't. It's not going to impact.
When this company matures, okay. When this company matures, which will happen. Right now, you're already getting. It's like Cisco of the years ago.
You're saying the market's moving in dog years. They're giving it away for their cloud business. They're giving it away for $270 million. They're giving it away for $413 million. All of these businesses are growing 100% year over year.
They're underpricing it.
That's giving it away. I would like to be a business that gives that type of shit away. That's what the business I want to be in. Like I would invest in each of these businesses.
A great business, but you are paying a huge. In interest of time, let's jump there. You are paying a huge
company in cybersecurity and potentially the best company in enterprise software. They deserve the premium.
The best company in enterprise software causes all their customers to blow up. All right, good. Good checkpoint there. Tell me what incident has Palo Alto Networks had? What incident has Fortinet had? What incident has Checkpoint had?
Palo Alto is a good example of like where this company is going to be. It's just like it's a matter of time before they're $100 billion company. Palo Alto is a good example of like,
and their multiple will compress. It's not going to. The problem is you're assuming this multiple stays no matter what size that they grow to. The multiple is going to compress as they eat up this TAM, and people realize there's not as much for them to go grab.
They're eating up a TAM of $150 billion is going to take a decade. They're going to get to 10
I'm
billion
arguing it's
before
closer to 70. They
they
haven't
eat up.
proven to me they have a $150 billion TAM. So they trade at 13 times forward revenue. The next closest company, Datadog, 11 times. Palo Alto Networks, 12, call it 12 times. Palo Alto Networks, 12 times. The growth for Datadog is right in line with CrowdStrike. So next 12 months, CrowdStrike's expected to grow 22%, which is quite a bit below what you were showing, by the way. That is the latest estimates from the street. Datadog, 21%. So same level. Palo Alto's a little bit lower, 14%, but they've got some things going on with scale there that gives them an advantage, as well as a superior rule of 40.
They're growing 8 percentage points lower, and they're trading 1 multiple turn lower.
Yeah, look at
Datadog. You're saying it's a great value, is what you're saying? Okay.
There's a reason I sold Palo Alto Networks. It's not cheap, and the growth isn't there. They gotta show the growth. End of the day, when you look at this thing versus the peers that are actually growing fast, there's some of these companies up top like Checkpoint and Gen Digital that are being valued on a cash flow basis. They're not growing, right? They're the slow growth companies. So I'd almost cross them off this list. But when you look at them at our metric we've talked about in the past, EV to next 12 months growth, next 12 months revenue divided by growth, the lower the multiple, the better. They are one of the most expensive stocks on this list by a mile. Sentinel-1, their nearest competitor, is 0.26. They're at 0.61. They're 3 times almost the value there for someone who's also growing faster than they are. They're growing at 27%. End of the day,
this is a good example of you get what you pay for. And CrowdStrike is the best company on this page, and you have to pay up to own their shares.
Well, all right. So let's put a little more of that in perspective. So this is from Altimeter. I was going to say Altimeter. sorry, Altimeter. This shows some of the efficiency metrics. So, like, if CrowdStrike is such the superior company, like, let me compare it to like its peers. And so, you talked about rule of 40. So, what is CrowdStrike expected to do in the next 12 months? Rule of 40, 48%. So that's again adding the growth plus the profitability together percentage to get that. Well, if I look at the next closest peers, Datadog is at 47. So basically the same. Palo Alto, 51, superior. Zscaler, which we haven't talked about, 45. They're all right in that same range. Sentinel-1 is a little bit lower, 32. So they are playing catch up to CrowdStrike. The other thing I'd love to pay attention to is like, give me like, what's the payback, right? Are they an efficient sales machine? So maybe that justifies, again, the premium. But again, I look at them right now, they're being estimated 26 months according to Altimeter. You look at Datadog, 19 months. Zscaler, 25 months. Those are both superior. We don't have it for Palo Alto because they're not a pure cloud play. Sentinel-1 is behind them. They are losing to CrowdStrike. Like, they have to spend a lot more to get a sale at 42 months, which is why they are the lowest valued. But if you look at this, I would say Datadog, Palo Alto, and Zscaler should be valued. It should be valued just the same. All these metrics are right in line or worse.
Yeah, the big difference between those companies and CrowdStrike is that CrowdStrike has twice as much revenue. CrowdStrike basically has $4 billion. Zscaler has 2.
What about Datadog?
Datadog has 2. Like, CrowdStrike is operating at the exact same scale with twice as much revenue. Like that, it's like I said, this is an unparalleled business in enterprise software at this scale.
Oh.
Like, I think, look, Datadog, Zscaler, those might be the LeBron James and Kevin Durant's, and CrowdStrike's MJ.
So this is my friend Gordo loves these regressions. So I stole altimeters versus getting the analysts working on this. And so they show kind of this metric going across next 12 months of revenue multiples compared to growth, and they plot the universe of SaaS companies. And so this just shows like CrowdStrike is kind of way up and to the right, which is like the most expensive of all companies compared to like all these other peers that we just talked about that had similar metrics. So they are the most expensive by far. So why would you want to pay that much for this business that, one, just, put risk into their pipeline, two, already their proven TAM in my mind, like they already traded their proven TAM several years out or above it. it down, and it doesn't justify the price tag for me. So that's kind of the bear case for me. Again, I'm not saying they're a bad company. I agree with you. Like, they're a great company, but I just don't know if this execution can continue on for what's priced into the stock. And this is my last slide. I'm done.
Yeah. I mean, I'll give my official view. I think we
Let me
all know what
guess.
it is. Like, I am actually a bull on
You're a
Crowdstrike. I
raging
think that they're
bull.
one of the
Do you
they're one of
own
the
this in your
better.
PA?
I don't know this might be, but they're one of the better cybersecurity companies, if not the best, that we've seen in the last 15 years. Like, it's one of those things, like, irrespective of the price and everything else, like, if you just wanted to own cybersecurity and like not think about it for the next 5 years, this is probably one of the better, if not the best way to play it. They have the scale, they have the technology, they have the team, and like, even though we disagree about it, I think they have the market and the tailwinds to go and build a very, very, very big business. And I think $100 billion is a matter of like when, not if in terms of whether they get there or not.
So I will say I'm not. I am truly a little more on the bear side, but I'm not a big bear. But I just feel like the risk reward is not something that I want to jump on here, even though they're down 36%. Like, they were, this chart, even after being down 36%, feels like there's still a premium price, and I do think there's a lot of risk. What I have nibbled on personally is a little bit of Sentinel One.
Yeah, so I wish. Yeah, I guess I can try to be a tiebreaker. I guess ultimately I struggle with. Part of me is like I struggle with these expensive sort of best of breed names, and like I just feel like this part of my ignorance of the security market. It just feels like this market's incredibly diverse, and people can have like many vendors because there's many different applications, and it's just not super clear to me for that a company has 5% share of their core market that's just like the persist going to be the winner forever. I didn't love seeing that 79% of revenue endpoint, even though there's a lot of adoption. But I will say in the past, like winners like this tend to do well. Like the Facebook's had some pullbacks, and this had a massive comeback. And like I've missed all the big buy the winner kind of investments because they look expensive, right? And this is still a lot of room. Like 5 billion is not that much revenue. I do agree it's a huge TAM. I guess gun to head, I guess I'm buying it. I feel like it's not as obvious to me that even though they've done really well in the recent past with the it's not an emphatic. I feel like there's some doubt. You raised some good doubts, I think, on this one, but I guess it's a narrow decision. I guess for Brucey boy.
Yeah, and I'm not a strong bear either. As I said, I'm pretty neutral on it.
Speaking of bears and bulls, bulls win, bears win. Pigs get slaughtered.
Say make money,
Oink,
money,
oink.
make money, money,
We'll see you
money.
guys next
All right,
time.
see you next time.
Make money,
On
money,
Just the
money.
Tip.
Money makes the world go round.